Welcome to The Explainer. So, you've just bought your first home. Congratulations. But now we've got to talk about something that feels, well, pretty overwhelmingly complex for most first-time buyers in the US, homeowners insurance. We are going to break this down into a clean visual deconstruction today. Consider this your ultimate guide to building a solid protective shield around your massive new investment. Let's just jump right into it.
Okay, let's dive into this. Here's our roadmap for The Explainer. We'll be looking at 1. The homeowner's safety net. 2. Inside your insurance policy. 3. Policy exclusions and limits. 4. Premiums, deductibles, and escrow. And finally, 5. Common myths and pro tips.
All right, starting right off with Section 1, the homeowner's safety net, protecting your biggest investment.
Look, buying a home is a massive, celebratory milestone, right? It's huge. But with it comes a totally new level of financial vulnerability. Just imagine this scenario for a second. What happens if a sudden freak storm knocks a massive tree right onto your roof? Or, say, a cooking accident sparks a major kitchen fire? Without a solid plan in place, repairing that kind of damage could literally cost you tens of thousands of dollars straight out of your own pocket. Honestly, it's a terrifying prospect.
And that is exactly where homeowners insurance comes in. At its core, it's a financial safety net and a legal contract. You pay a fee to an insurance company, and in exchange, they agree to step in and pay for specific listed damages to your home and your belongings. Now, unlike car insurance, the government actually doesn't legally force you to buy this. But make no mistake, this bundled package is an absolutely essential contract. It's the only thing ensuring you don't lose your entire financial future to a single disaster.
It's also exactly why your mortgage lender cares so much. If you have a mortgage, well, your home is the collateral for that loan. The lender needs to guarantee there's money to rebuild it if the worst happens. Now, if you let your personal, relatively affordable policy lapse, your lender will just step in and buy what's called forced-placed insurance for you. And trust me, you do not want this. It's a terrible deal. It's incredibly expensive, it only protects the lender's financial interest, and it offers absolutely zero protection for your personal belongings. Keeping your own policy active keeps you in the driver's seat.
Moving on to Section 2, inside your insurance policy, the 6 pillars of standard coverage.
Most standard policies are built on these 6 pillars, and it's actually kind of amazing how comprehensive they are when you break them down. First up, we've got the dwelling. This covers the physical house itself, so if that kitchen fire we talked about happens, this pays to fix it. Second is other structures. This protects detached things on your property, like a garden shed or a fence. Third, personal property. This is all your stuff, your furniture, clothes, electronics, the whole shebang. Fourth is loss of use. If your home is totally unlivable after a covered disaster, this covers your hotel and extra food costs while it's being repaired. Fifth, personal liability. This steps in to protect you if you actually get sued because someone gets injured on your property. And finally, medical payments. This handles smaller medical bills if a guest simply trips and falls at your house, regardless of whose fault it was.
Now, here is a truly fascinating detail about your personal property coverage. It can actually follow you anywhere. Seriously, if you take your laptop on a vacation and it gets stolen right out of your hotel room, your homeowner's policy might still step in to cover that loss. So your protective shield isn't strictly confined to your actual property lines. Pretty cool, right?
Let's hit Section 3, policy exclusions and limits, what your policy won't fix.
It is incredibly common to just assume that insurance covers absolutely everything, but honestly, that is a dangerous mistake. There are some heavy hitters your standard U.S. policy will almost certainly exclude. Natural floods and earth movements, like earthquakes or mudslides, are completely out. You have to buy separate, specific policies for those risks, period. Your standard policy also won't cover pest infestations, so termites or rats are on you. And naturally, it definitely won't cover any intentional damage you or a family member causes to the property.
So, the absolutely crucial point here is this. Insurance is designed specifically for sudden, unexpected accidents. It is not for a worn-out 30-year-old roof. It's simply not a maintenance plan. If your roof starts leaking just because it's old and worn out, the insurance company isn't going to pay for a new one. Routine upkeep is entirely your responsibility as the homeowner.
Section 4, premiums, deductibles, and escrow, the math behind the shield.
All right, there are 2 main financial components we need to look at. First is the premium. Think of this like your subscription fee. You pay this monthly or annually just to keep your coverage active. Then you have the deductible. This is the initial out-of-pocket hurdle you have to clear first. It's the amount you literally have to pay yourself before the insurance company steps in to pay their share.
Let's look at how this math actually works in the real world when you file a claim.
Say a bad storm causes $3,000 in total roof damage. When you file your claim, the adjuster approves it. Now, if your deductible is $1,000, you pay that first $1,000 straight out of pocket to your roofing contractor. Then, the insurance company cuts you a check for the remaining $2,000 to finish the job. And here's a pro tip for you. Choosing a higher deductible usually lowers your monthly premium, which is great, provided you actually have that emergency cash saved up.
Now, how are you actually paying your premium? For a lot of homeowners, it's done through an escrow account. Essentially, this is a special little bucket held by your mortgage lender. So instead of you writing a check directly to the insurance company, you just pay a portion of the cost every single month as part of your total mortgage payment. The lender holds that money in the escrow bucket and automatically pays your insurance bill for you right when it's due. It's a highly convenient management tool to guarantee your premiums are always paid on time and your coverage never accidentally lapses.
And finally, Section 5, Common Myths and Pro Tips, Maximizing Your Protection.
A huge misconception out there is that you should insure your home for its market value, which is the selling price, including the land. But listen, dirt doesn't burn down or blow away. Your insurance only needs to cover the physical structure. But when it comes time to rebuild or to replace your belongings, you really have to understand the difference between replacement cost and actual cash value. Actual cash value only pays you what your old used item was worth today after depreciation. Replacement cost is far better. It pays whatever it actually costs to buy that item brand new right now. Always, always strive for replacement cost coverage.
Here is another massive myth we need to bust right now. A lot of first-time buyers think they are locked into whatever insurance company their lender recommends. You are not. You firmly have the right to shop around and find the absolute best deal for your specific situation. Please do not feel pressured to just take the very first offer handed to you.
So to make sure your safety net remains updated, accurate, and cost-effective over time, I want you to follow these 3 proactive steps. Number 1, make a home inventory. Literally, walk through every room, take photos or a quick video of your belongings, and store those files safely online or at a relative's house so they aren't lost in a disaster. Number 2, review annually. Your needs change. If you do a major kitchen renovation or buy some expensive jewelry, you need to call and update your coverage limits. Number 3, shop around. Get multiple quotes from different companies every so often to ensure you are always getting the best price for the protection you need.
Which brings us to a final, absolutely critical question. Is your biggest asset truly protected right now, or is your financial shield full of holes? I really hope this explainer has given you the confidence to dig into your own coverage documents immediately. Take control of your safety net, protect your financial future, and keep exploring the incredible world of homeownership. Thanks so much for joining me today.